The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 24th of September. And thank you, Steve, for 2 great hours. Don't forget, today's the last day to get a 25% discount on Steve's course. Should be a tremendous course, a lot of information to digest, I'm sure, and then to put into practice. And he teaches you how to put it into practice. So please, you know that here at TFNN, we're all about education. You also know that Steve spends a good 2 hours every day discussing the various techniques that he's been working on. Some of them are older, some of them are new, some of them he's taken and developed as his own from other techniques. So just a wealth of information and a wealth of discount there, 25% discount. So please go to front page, check it out. Also, don't forget tomorrow. Do I have it over here? Let me see if I can find it. I'll put it up just for those of you who think you might have a chance of going there. Tomorrow evening, Wednesday evening, here in the Boston area. There it is. Now, click on it, slide it over. There it is. Boston's Investors Group 10th Anniversary Meetup, guest speaker Wednesday, September 25th, 2013. That's tomorrow. Basil Chapman, the opening call newsletter and TFNN.com, host of the Tiger Technicians Hour, Monday through Friday, 11 a.m. to 12 Eastern Time. So, I'll be the guest speaker tomorrow at 70 Memorial Drive, Cambridge, Mass, MIT Sloan Building, room E51-325, 3rd floor. A little bit of a party going on. The building actually is the corner of Wadsworth and Amherst. It's off Memorial Drive. And I love the view. I've always loved the view from that side looking at the Back Bay. That is really a great way of seeing the vista all the way past the State House, the Gold Dome, past the Museum of Science, and you just turn around, you see the whole of the Back Bay, and you see Mass Ave Bridge, you see the Kenmore sign, you see the Citgo sign, you see the Red Sox, the lights are on, the Red Sox are playing over there. It's just a fabulous vista. Anyway, 7 to 8, celebration with the Boston Investors Group, plus the Investors Business Daily Group. So these two groups together and guests. So please bring some sandwiches if you want, main dishes, veggies, maybe some soft drinks, maybe some dessert, whatever you want. That's your entrance fee. There's no fee and there's no sign up. Although I'm sure that if you went to the front page, to the front page of the Boston Investors Group, and you say that you would be coming, it would help them in terms of knowing, plates and cups and things like that. So if you do sign up, that's great. But there's no fee. And then 8 p.m. until who knows when, I'll give the presentation. And the questions are really great. What's really fun about this group here in the Cambridge area, over in MIT, is whenever I go, I get questions out of the blue that are completely different to what we normally talk about here as technical analysts. One of the things is there are a number of people who don't do that much in technical analysis. They mostly do fundamentals. Then there's just a whole bunch that do a tremendous amount of technical analysis. And people trade everything, all sorts of things. And I always get interesting questions on interest rates and bonds and stuff. So I go into areas that normally I don't get asked over here, or I just don't get to. So a great time. And then what's nice about it is you can get the follow-ups. So let's go to the numbers. Let me go to my e-mini chart. There was a question about the SLV. I'll look at that in a short while. Here we go. Nice little rebound from a very important 1680 area, 86 area support in the e-minis. This is the e-mini. Let me show you the daily chart right here. Gone to a peak D, pulled back from the doji high. But I put a lot of weight, that's W-E-I-G-H-T, together with the W-A-I-T. I do a lot. This is where I think patience is a virtue. whenever I look at that fast-moving average, and you remember I had this way back when the gold and silver contracts were making peak F-tops in their monthly charts, I said, watch that fast-moving average. And you got the tremendous rebound that made the lowercase h pattern. Well, what I'm looking at here is that green line, if you're looking at Tiger TV, you'll see that green line, in fact, inherently says, be careful, there is internal strength, and that internal strength says you can rebound. It doesn't say that you can go all the way back to the top, but it does say you could rebound and rebound quite strongly. Maybe even, and I'll draw this in, making a pattern something like this, like that lowercase h pattern. It comes down and makes an arch formation. However, I'm also looking at this and I'm saying, this is a peak D in the E-minis, but if you go to the SPY contract, it coincides and it's peak D as well. There, the stochastic went down to 75% on the last pullback. The MACD is still positive, possibly making an H formation just like it did over there. Look at that H formation, where it was just a tiny little bump up in that fast-moving average. And look what happened. It ran all the way from the 167.52 area in the SPY to the 170s, 179.7 in fact, which is exactly within a dollar of the S&P. We actually went short there. We ran it all the way down from 170 to 163. This is the SPY, but it was actually the S&P we had an ETF that was 300% short, but we didn't take profits in time. We took a very small gain after seeing fabulous gain. I had too much patience. Sometimes you need patience, sometimes you don't need patience. You just got to get out. Once I recognized it was the Chapman wave squash that says you can go much higher, and then the stochastic will pull back, and that fast-moving average can keep you going higher. That's when I looked at it and I said, wait a minute. If the SPX is at peak C, maybe /G, and the Dow, INDU, and I'm going to discuss this in great detail tomorrow. Excuse me. Not sure what that tickle is in the throat. I'm anticipating, I know there's terrible news out there and there's just cut-offs and cut-ons and who knows. But I'm looking at this and I'm saying, oh, it's a pity today went so low, although it did hold quite nicely at that 15 in the Dow. It held at 15,340. That was one of the levels we were looking at as key support. But most importantly, the volatility index has pulled back. So let me just run the numbers, then I'll go through some of the details that I'm looking at here. We'll look at it very intensively. And then I'll go to some other areas that perhaps we can look at. I'm also going to just double-check something here. Yes. When I'm looking at the markets, I try to get the big picture as well. And my monthly chart is still saying higher prices are still to come. Now, let me get that out of the way. The weekly is saying we might have recycled, which means that the downside might be limited until maybe mid-October. I don't know. Just what I'm saying. So let me see. The Dow's up 24. It's 15,426. The S&P is up almost 3 at 1704. You've got gold down 10. Man, that gold contract is just getting beaten to death at 1316. Silver's down 24 at 2161. Crude oil is down again at 42, 103.17. That's because of the talk of peace, possible peace. How many times have we heard that? Bonds are up 24 30 seconds at 132 and 21 30 seconds. TLT's up 60 at 106.29. The dollar is up 0.08 and the euro is down just a tad. Now let's go to a couple of things that I'm looking at here. When, in fact, I'm looking at chart formations, I also, for my subscribers, I go into great detail every day about these particular chart formations. You see this declining trend line? Look how the prices held it and bounced off. You see the left side, right side price time match? It should go to right there. We should go to, on the 120-minute chart, 1:30 tomorrow, 1:30 today. 1:30 tomorrow, the 25th. Well, it's saying that at this particular point, you've got a left side, right side price time match, which hasn't been met since the level that we'd be looking at would be the low of around 15,283. Got down to 15,000, what did we say it was, 340? Yep, 15,340. So if, in fact, there's a rebound from here, what it does is not only could it potentially delay the pullback, but it could also set in place something that's really fascinating to me. I'm going to draw it in right now. And that is, I'll take it first from here. I don't like that. I want to have it closer. So I'm going to take it down to, from there to there. That is, in fact, a declining wedge formation. And it says that if at any point the Dow is able to take out 15,481. Today I said to my subscribers in my opening call, and in the opening call, we are short and we are long. We're short a certain sector that's been absolutely a dynamic sector for years. And so far, that's working nice. We short a certain stock, and so far, that's making a nice little small gain. But most importantly, we also have long positions. And those long positions seem to be working. And these particular long positions, if they are working, it is, in fact, just a sign of internal rotational strength. We're also very fortunate. I'm talking about it now. Why? Because it's within 4 cents of our all-time goal. Actually, I'll talk about it right this very moment because in the work that I do, I like to go either very short-term or time frame to time frame. And some of you know that I've been looking at Rite Aid as a turnaround situation on a fundamental level, but also as a technical picture, a beautiful technical picture, with an eventual target, I'd said, of the 200-period exponential moving average of $5.11. We bought it at $1.78. We took half off in the twos. We kept the rest. We've had nice intermediate term, short-term trades with it. We also took a little bit off again at 351, just a little bit. So we have a core position. And that core position from 1.78 has seen the target of $5.11 missed so far today by 3 cents. Now, let me explain what I'm looking at. I'm going to go to the monthly first of all. Whoops, there goes the bell for the first round. I'll be right back. We're looking at RAD, Rite Aid, trading at $5.05. It's going to be a real tough decision what to do here. When you meet your goal, that's the time you have to think things through very carefully. I'll explain what I'm looking at. We'll be right back. Dow's up 29, S&P's up 3. 877-927-6648. Love to hear from you.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman. So we were looking at a stock that my subscribers got into at $1.78. It's trading now at $5.05. My target was $5.11. And the very difficult thing right now is, what do you do? What do you do if you didn't get in? What do you do if you got in a little later? And what do you do if, in fact, you've been in all the way and the long-term prognosis for a stock like this, having turned around, says that, yep, there could be a couple of bumps along the way in the monthly chart. But if it's now turned the corner, it should surely go back to at least the high of 674. That was the high back in June of 2007. Was still back in trouble. I remember it was almost at this time that the CEO, I remember her being interviewed by Kramer, and she was talking about how fabulous things are and the things that turned around, and it went down to 20 cents. 20 cents. Is that 2 times 0.28? Yeah. So down to the 20 cents area. So this is a huge move. But when a company turns around and it's had 3 quarters, it might even be 4 quarters of good earnings, all of a sudden, once it goes over 5, institutions become interested in it. So all of a sudden, there's a wonderful situation to be in. What do you do? Well, the way I'm looking at it is this, and I'm going to go through it with my subscribers for tomorrow. And I said that if it hits a certain point, we're going to raise this stop at least on that core position. But this vertical move says you've set up a potential for a rectangle formation. And that rectangle formation takes you all the way down to the weekly chart of 3.89. That's a big percentage move. Not if you got in at the early level, but it's a big percentage move to consolidate. Beautiful gains, because a lot of this is also the anticipation for some people, and then the surprise factor. Can't be shorts that much. I mean, at this point, I don't know how many people were short. So now what I'm looking at, you've got a gap up with a low of $4.13, and the high the previous day was $3.79. See, that's a big disparity between the playing field that it was on and the sky-high level that it's jumped to. Says to me that at some point we're going to fill that kind of gap, or at least test it. So what do you do? So I'll be going through tomorrow different perspectives. Now, what's really important about this is that we were fortunate enough to have a substantial core. Can you peel off some? Absolutely, you can peel off some. I don't see any problem peel off some. We always try to put it back at lower levels. That's a potential. But I wanted to just show this as an example of time frames. When I initially spoke about this way back in April, it had gapped up. Now that gap hasn't ever been filled. This is the gap way back at between $1.89 and $1.96. So that's just something to be aware of. Sometimes you don't fill these gaps for years. Sometimes you just never fill these gaps. But what's important is that every single level had a different cup formation or a falling axe formation. Now there's a formation that is, for this chart, it hasn't been seen for a long time. You did get it back in 2009. And then there was that very long-term cup formation, and then a pullback, a retest, and a breakout. The weekly chart says, wow, something spectacular is going on. There was a one-to-one expansion, which is what we were working on, going to 3.40 the moment it broke 212. But now what we've done is we've got an expansion that says there's I can call it almost a single leg A up. And it's this particular move that's so difficult. There are charts that I can show you. Let me just see if I can grab one here. Let me see if this is one of those CERS. I'm looking at low price stocks. No, that's not one of them. Let's go to EXEL. EXEL. All right, I'm not picking them up. Actually, I am, but I can't talk about it because the pattern's a little bit different. But there are some stocks that you just don't know where to buy because they've had such spectacular moves to the upside. And then when you look at the monthly chart, you say, well, wait a minute. This is just the start of something. I'm looking at a stock called Excelsis Inc. I don't know what they do. But look at those moves when it does the move. And now look at it. It's a very strong move in the daily and the weekly. Yet the monthly says, hey, this thing's just barely getting going. So I love to look at time frames. And the time frame that we were looking at most importantly was the monthly chart. Once it started to break out above that peak B, well, we got to a C, and within 2 months it broke out. So the peak D, the leg D that started up, it's a huge leg. And where is it right now? It is, as I say, 3 cents right into that 200-period moving average, which it hasn't even looked at since it broke down back in September of 1999. High was 19 and the low was 11. Then it broke the 200-period moving average. So I wanted to go through some of those things. I'll talk a little bit more. Then we'll look at silver.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Just to finish this, in terms of talking about different styles, there's a gap in Rite Aid. That was in the 120-minute with a high of $3.72 at 4 o'clock on the 18th. Next day, it gaps up. I think that was the earnings news. And the low's 413. So there's your one gap. Then today, it gapped up in leg E in the 120-minute chart, leg D in the daily. Normally, if it's a Friday, I get very nervous about a gap up. I'm still a little nervous. I would not be surprised if this closes at about $4.97 and then digests the gains. If it breaks, it doesn't even have to close, but if it breaks into the 520s, this is RAD is a symbol, there's a different pattern altogether. And it's a very comforting factor because it's going to be telling me about the 200-period magnet of the monthly chart. If it doesn't do that but closes the month underneath that, it's telling me digestive period is forming. It's a little bit mature in this move. Not a little, it's quite mature in this new move. It's going to need some time to consolidate. Then we will be looking at that 413 to 372 level. If it closes above 520, you've essentially raised the base, and all of a sudden you've got institutional money wanting to come in. That's the reason why I was determined to try absolutely, no matter what, to try to stick to the target that we had. But once your target is met, then you know the expression, I don't like the expression, but basically it says that greed, if you're greedy, you're in trouble. We were not. We had a plan. and it's reached our goal. So this is where it gives us a little time to think about how to achieve the next step, because now there's a maturity in the stock. It's a turnaround candidate. It's proven itself. It is now on the focus of the big funds, because it's a low-price stock, but with tremendous upside potential as they see it. We will be dealing with it as if it's actually reached a particular level, and now it needs to consolidate. What do we do with it at this particular point? I just wanted to clarify some of the things, because you see we went from the daily to the weekly, the breakout in the weekly using the Chapman Wave instant restart potential, as well as the cup formation. All said, that's something that you've got to keep in mind, because the technicals were still very strong. Now I'm getting signs that there's a certain overbought level that has to be worked off, and then finally we roll over into the long-term monthly chart. It is, in our wildest dreams, we couldn't expect it, that it would make this U-shaped pattern. So those are the considerations you have to take in. So enough with that. Now I said I'd look at the SLV. SLV is the silver chart. That went to a peak D in the monthly chart. In Chapman Wave methodology, what we look for is to go from the lowest, most obvious low bar. In this case, SLV lowest low bar was June of 2006 at 1238. Nope, at 955. And then it went peak A, B, C, makes a cup formation, breaks out, goes to D, and then to E. And that was at 20.73 back in March of 2008. Plummets back in like a lightning bolt. Down, up, down. Goes all the way from that level down to $8.45 in October of 2008. And then it goes peak A, B, C. Missed that one. That's a D, because I had to redo these charts. So I missed that one. It is actually a leg E again. I love the consistency of certain stocks and indexes where they go to certain letter, and that's the letter you got to say, all right, be careful. And it goes to, on the April of 2011, it goes to 48.35. That's a huge move from the 8s. So it's a 400% gain. Comes back down, A to B to trough C. Lowercase letters on the downside, trough D, bounces, makes another arch formation, takes out the left side low and plummets to where? To the 200 period exponential moving average. Exactly. Right there. I meant to do that. Right there. And at $17.75, where did I see that? $18.06. It makes a low, and now it's in gray A. Why is it called a gray A? Because it's just a bounce way underneath the previous highs. Has to prove itself to say that it can actually go all the way to a peak D. And the stochastic is making a beautiful W formation, but the MACD says, I'm not there yet. Now, I've talked about gold and silver, and this is the iShares Silver Trust. I've said way back, at least a year and a half ago, I would not be surprised if gold only makes its really strong, powerful low. I don't mean counter trend rallies. I mean the low. When I start to see at least two places that I look at and I pass very often that say gold and silver sold here, or gold's we'll buy your gold, whatever it is. One of those little shops that opened up back in 2011, 12, and even this year you see them. And until I see for rent signs, I'm going to say, hey, maybe counter trend balances absolutely, but I don't think this capital A, like an Eiffel Tower up and then straight down, says that the full move is done. I'm suspecting that we've got until maybe December or early next year, and then we make a low in gold, and that low could be a pretty... When I say substantial, I'm now talking about starting the daily to the weekly to the monthly buy signal that goes to a buy mode. It's called it's a hat-trick top or a hat-trick bottom. This was a hat-trick top at the high in SLV back in April of 2011 at 48.35. Why? Because then you saw the daily had already given the sell signal, the weekly had given the sell signal, back at a peak E, beautiful long-legged doji, which very often wants to be retested. Look at that. It comes all the way down from 48, goes to 31.97, and then goes right back to 42.78. So it gets into the lower bar. 43.53 was the low of that candle. So it just missed getting there. Now what we're looking at is a possible second arch formation, and that can be aborted if at any point in the next 2 months SLV goes above 23.84. I hope that covers it on the intermediate term. Now, very short term, where would a bottom be? The MACD is still quite negative. Stochastics just made a potential failure. It's going to take a little time for it to regain its strength. But I can tell you this is SLV closes under 20.45 was the low of the 18th. If it closes under 20.30, it's going to retest the low of 1956, which is the low of the high bar of the 9th of August. But this particular pattern says be really careful. Why? Let me just draw this in here. Because there is key support on a trend line basis, which also confirms that a break underneath 19.40 says that you will be retesting the 19 to 18 level. 1775 was the low that was made back in June. I don't know if in this move it needs to go that far, but I'm going to be watching it closely. And some of the stocks just had that single leg up. Let's just look at GG. I think maybe that's one of those. Yeah, single leg A up. That's called the, I don't talk about it in my CD. It's something I developed later on. It is what I call the single leg A up syndrome, which says that if you break a certain point after a single leg up and then you come back down, if you break a certain point, you're not only going to retest the low, you could in fact make a lower low. So I would not be doing any buying yet. And not only that, when silver turns around, they often do very big moves, but my thinking here is that if silver, SI, the actual contract itself is holding quite well. If silver takes out the contract, this is the D, the continuous contract takes out 21.16, then it's going to go quite a bit lower, and then that same trend line that I drew before becomes active, and that trend line says 20.54. That's really a key level. It's at 21.57 right now. What would constitute a sudden, and it can happen in this particular pattern, what happens, can it make a cup formation? Well, that makes the next 2 days very important. Why? Because if in the next 2 days silver continuous contract, maybe some of you don't get that. I'll go to I'm going to the Z contract. If the December contract is able to close above 22.65, it's at 21.59 right now, that will say that there is a potential right here for another rally attempt, and that's a cup formation. Why? Because you just made a very quick H pattern, and that low is held. So a close below 21.225 and it goes lower. Would I be buying right now? You know, I'm prepared to hold off for a little bit. I don't mind these counter trend bounces. We've traded them before. So treat it as a potential counter trend bounce. If it does bounce and it gets to 22.45 to 22.50 in the next two sessions, that'll be a big move. But if it does do that, that's a good sign to say, okay, now we're going to go back up and maybe try to test the 23.5 to 24.69 level. So I'm in the camp right now that says, prove yourself before I even nibble on anything in that area. Let's just quickly look at the GLD. 877-927-6648 is the number to call. Yep, same sort of thing. Eiffel Tower, straight up, straight down, single leg A syndrome. It's trying to rally to the high of the day so far, but the technicals say just be careful. The GLD takes out closes under 125.15. That 123.55 area becomes really important. Now, it's important, but the low is really 114.68 that was made the week of the 28th of June. So far, this is actually a nice consolidation. As I say, I can see counter-trend rallies. I just don't think that this is the low based on my, let's call it my Trends Watch parameters. And that says until I see those stores start to go for rent. We haven't made the low in gold, not after this. This is, in fact, a bear market in gold. These are counter-trend rallies within the bear market. That's the way I'm looking at it. It has to do a lot more to prove itself to me that this is just an intermediate-term 3-year consolidation. I got a feeling it'll look worse when it's done, and it could last a little longer. So that's that. Now let's go to a couple of other things that are very important. USO. Let's look at the USO because that is the United States Oil Fund. Monthly chart just in a, oh man, it is just in a trading range, in and out, in and out. That massive move that had it going to 1917 back in July of 2008, and then down to the low 20s. That's just sitting there and saying, you know what, be careful. Now, if you remember, I outlined this the other day. I said I'm not outlining it yet to see if it's going to be the Chapman wave stalk leg formation. I'm outlining it because of that yellow line, that 200-period exponential moving average. So the United States Oil Fund, ETF, is at 37.02, down 25 cents. It made a peak E. If this week it closes underneath 37.78, the 9-period exponential moving average, and the MACD closes negative underneath the green line goes faster moving average closes under the slow red one, and the stochastic is at 84% and it closes under 80%, all of a sudden, we've got a peak E-top that says, be careful, because the high of 35.49, the high of the week of the 15th of February, that would be key to this particular pattern. If it closes underneath that, it could have a deeper correction. The daily chart made a peak F-top in the Chapman wave, and that peak F-top says all the technicals have been very negative. Most important level at 37.02 right now to watch will be 36.35, the low of the 8th of August. If it takes that out, it not only has broken an uptrend line, but it means that it's going to go to 35.64, the 200-period exponential moving average in the daily chart. Okay, so now let's go to something that I've been wanting to look at all day, the TLT. The TLT is at 106.53. It's in leg D. Very quiet move, this leg D. It made the H pattern. There's that cup. Let me just show you. The TLT is the Lehman 20-year Treasury Bond Trust. It looks great when I do this. Doesn't that look good? But when I do that, you say, it's just in this rectangle pattern, maybe even making an arch formation. But that arch formation could be seeing another cup. And that cup would be very important. Why? Because if the TLT is able to take out 107.63, the high of the 12th of August, the next level of resistance would be 109.69, the high of the 22nd of July. But I can tell you this: when I see 109s, all of a sudden that 200-period exponential moving average becomes really important. That's at 112.65. It doesn't say it's going there. It's going to say it's the magnet that's going to keep drawing it in. Now, let's go to, I didn't want this page. Let me go to something else. Get out of this. Close workspace. Yes to all. Get into this particular one. Now, this to me is really fascinating. White time frame? No, long-term charts. Look at this. Well, another break. There'll be time when I get back. 877-9276 is free to take your calls. Well, look at this. If you look at the weekly chart of the 30-year T-bond fund, the white one, you've made a peak D at 39.30, a peak E in the 10-year note at 29.84, and a peak C, well, C so far, in the 5-year. That's pulling back. I spoke about that a little while ago. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman. Let me just show you this chart here. So I believe the weekly, so far it's a high-level consolidation. That's all we can think of. It's done that before, and then it's spiked up to an E and then pulled back very sharply. Is it going to do the same sort of thing here? It's hard to say. But right now, the depth of the slide depends on whether the 30-year yield, these are all yields, takes out 3602. It's a 3930, but you'll only know that if it really decisively takes out 3780, 3.780. If it pulls back, then we've got to say, hey, now's the time that the market could, in fact, money goes back to bonds and the market could be vulnerable. But hey, wait, look at this. Here is 1, 2, 3, 4, 5, 6 different instruments. First one is UNP. I've just had this up forever. Someone told me years ago that as long as UNP keeps making new highs, the S&P will do that. I said, come on. Look at it. This is the first time it's failed. There's a divergence. UNP has not gone above its 169-ish high, but the S&P has gone. This is the SPY. So look at the charts. Could you tell me which one is which? Look, this is one. Here's another one. This happens to be the SPY. This happens to be GE. I stuck it in there because I think it's a core to the Dow. It tells us a lot about what's going on. Diamonds, look at that. Diamonds, look at all these charts, all rising. This is the Qs. Look, the Qs you would think is the best, but in fact, when you look at it in the longer term, the Qs, because of Apple, have had more sustained moves to higher highs. But in fact, from that high back in September-ish of 2012 to here, the diamonds actually look like they've had equally as good a move. So, and look at this one. This is the IWM. Steadily higher, slightly higher highs. So I love to show this chart because it tells you that as long as a trend is in place, all the indices should generally go in the same direction and at about the same speed. Now, let's go through this again. I wanted to show you something that I think is very important. I've extended it out, but right now you've got the VIX index. It spiked. Now, I was looking at this and I thought, for the move that the VIX spiked yesterday, that was a pathetic decline in the market. And I'm going to spend a lot of time on this tomorrow evening. I'm going to talk about the character of bear phases. Well, if this is a bear phase, we will know very soon, because by the end of the day, the VIX should be above 1471, somewhere around the 1490s. The XIV, which is the inversion, should be down below 2766. And the Dow should be down about another at least 45, but more like 65 to 85 points. If this is just merely a consolidation phase trying to, it just with still residual internal strength, and my relationship to the sectors that I focus on for my subscribers remains that there's a rotation going on. I'm a little upset that we were stopped out for a tiny 20 or 30 cent loss on one particular issue on Friday, when in fact I love the action. I don't know how it did it. I actually do, because there's one particular stock in the sector that gave a very bad outlook, and there was this sequestration. There was a whole bunch of things going on, and that knocked it down. I love its action right now, and that's saying to me there's a rotation going on, and in fact this is possibly not the bear phase. The bear phase is going to come later, and it's going to include some of the fantastic winners of this year. And they're going to come down 15 to 20 or even 25%. That's what I'm looking at. But as that rotation comes through, we might not see a major sort of a 22% decline in the markets because of the rotation. That's my thinking, and I'll talk a lot more about it over the coming weeks or so. Stay tuned for North Van Hooser. This is the Options Hour with Think or Swim. Basil Chapman, Tiger Technicians Hour. We're closing up. Don't forget my service, the opening call, right there on the front page of TFNN. Try it for 2 weeks. This is a perfect time. I'll be back tomorrow. Have a great rest of the day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.